Alright, so with everything that's going on in today's crazy market, I feel like it's a good idea to go back to my roots and give you an update on the coolest way to invest, the dividend stock portfolio. I'm just kidding. It's not actually the coolest way to invest, that's just a magic trick, but dividends have been proven to be the purest form of passive income to make money while you sleep. So if you've never heard of dividends, or what they are, or how they work, then you've come to the right place. Maybe. Now before we get in today's video, I just want to give you a couple disclaimers. This is not financial advice. I am not asking you to buy or invest inside of anything in this video. This is more of a personal look inside of my own investing journey, and sometimes I will combine things like finance and investing alongside with silly things like magic tricks to make the videos a little bit more entertaining. Sometimes they're not so entertaining, but they're supposed to be used for educational and entertainment purposes only. Sometimes I will also annoy you and ask you to smash the like button. But all in all, I am more of an entertainer than anything else, and there are far smarter people out there on YouTube and elsewhere that you could learn from. None of this is financial advice. I never claim to be a financial advisor. There are no investing secrets that will make you rich because there is no such thing, and I will probably make mistakes in the future because I have a lot more to learn, and I lied to you because there's nothing on this piece of paper. So with that out of the way, one of the most popular questions I've ever seen about dividend investing is, which dividend stocks are the cheapest to make the most amount of money and passive income from? And it's a good question, and anytime I see it pop up, my answer is always, I'm not a financial advisor, this is not financial advice. No, I'm kidding. It is a good question. Which stocks are the best and cheapest to make the most amount of money from? But the more you watch this video, and the more you understand how dividend investing works, the more you're gonna realize that the answer to that question does not exist. It's weird, but I'll show you why that is by showing you how much the income from my dividend portfolio has grown over almost the last 8 years of investing, some of the things I've learned along the way, and the mistakes I've made. So with that said, let's get right into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the magic of compound interest.
Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it.
That was just a test. That was not actually a quote by Warren Buffett. That was a quote by Albert Einstein, but I don't know how to make his voice. E equals MC squared. No, I have no idea. When it comes to dividend investing, just remember that if you want to focus on getting the highest returns possible and make the most amount of money possible, it is not with dividend investing. Research shows that investing into broad market index funds, stocks and ETFs like VOO and VTI will give you the highest returns possible. That has been proven to be true. Now, when I first started investing though, I started with dividend investing and it has taught me a lot. It's been a great way to diversify and I still think it's an amazing way to invest. And here's a couple reasons why. Number one, Fidelity did a study earlier this year that showed dividend stocks were responsible for roughly 40% of the market's overall growth since the 1930s and 54% during decades of high inflation, like what's happening right now. Number two, dividend stocks during periods of high inflation that paid out the highest dividends were also outperforming the stock market the most. Number three, dividend stocks can also help lower your overall portfolio's volatility, which is a fancy way of saying you'll get less heart attacks while you're investing. And number four, dividends can't really be faked because no matter how much a company might manipulate its balance sheet with clever accounting tricks, that company is either making money and they can pay their investors, or they aren't and they can't. Number five, I like dividends because I think it's a little bit easier to plan for when you can quit your job. For example, if I know that I'm spending $30,000 a year to be me and to live my life, then I could take that number and multiply it by 25 because the 4% rule, and I'd get $750,000. I know that that's how much money I need inside of dividend stocks, generating 4% per year to pay me $30,000 a year, at which point I could quit my job and no longer rely on my active income to pay my bills. At that point, I am financially independent and retired if I wanted to be. Now that is a little bit easier to plan for than if you were investing in something like broad market index funds, which sure, you'd technically have more money with that strategy, But you'd also have this barrier because if you're selling your principal equity during a recession and selling your stocks at a loss, there's a little bit more of a psychological barrier. So at least when it comes to psychological investing, it's a little bit easier to plan for with dividends. That's just me though. Now the sixth reason I really like dividend investing is because if you invest in a stock and let's say it's losing value, you could still make passive income on that stock because there are 3 different ways to make money with a dividend stock, which I'll explain in just a minute. Now, number 7, I really like dividend investing because of how they're taxed. For example, if you're filing jointly, you can make up to $83,350 and be taxed at a 0% rate and pay nothing in taxes. There are very few investments in this world that I found where you can make in excess of $80,000 a year and pay nothing 100% legally. So that's pretty cool. So now let me share with you my portfolio and break everything down. So this right here is my dividend portfolio. Please keep in mind that I'm not doing this to show off how much money I have invested. This is just for the sake of transparency so you could see my journey. But this is a portfolio that has a combination of both dividend stocks and broad market index funds. With dividend investing, there's technically 3 ways to make money. The first way is through something called capital appreciation. And that's just a fancy way of saying that a stock's value, its price, goes up. Now, because we're in a bear market this year, we can expect almost all stocks to not be going up. There's no capital appreciation because everything is going down. The second way is through the passive income or the dividend payouts. Now, these happen on a regular schedule, monthly, quarterly, semi-annually, or annually. If you see a dividend that has a dividend yield, which is this number right here, at 4%, and it happens to pay monthly, it is not a stock that's paying you 4% monthly. It does not make it a better stock than a stock that pays yearly that 4%. Because no matter what the frequency is, you will still make that same 4% or whatever the dividend yield is. The third way to make money with dividend investing is through something called dividend increases. And that's because companies aim to increase their dividend payouts each and every time they pay them. So let's dive in a little bit more in depth and I'll show you how my portfolio is done. Please keep in mind, there are over 100 stocks inside of my portfolio, some of which I didn't even know I had because over the years, they split off into different companies and they give you fractional shares. So I don't really keep track of them individually because I buy broad market indexes. And whatever stocks I do have here, whenever they pay me, I reinvest that money back into themselves. This is something called the Dividend Reinvestment Plan, or DRIP. It automatically takes the money and reinvests it and puts it back into those stocks. Now, doing this though is how I expect my next payment to become a little bit bigger. And then the next payment I'll reinvest and the next one becomes bigger, and so on and so forth. And that's how you build the dividend snowball, which takes forever to start, but once it gets going, it grows faster and faster, and that's compound interest. That's exactly how I was able to break almost every single income record almost every single month. So let me show you. Last year in September, I made $1,058 in dividends, but this year's September was a mind-blowing $1,931, almost multiple 4 digits, which is insane because I remember back when my portfolio first crossed the 4-digit mark. It was back in March 2021. So that means it took me almost 7 years to cross $1,000. But now that I have, it's picking up a lot faster. That's because it starts slow, but the more money you invest, the faster it compounds. But I also do have to say, that's a growth rate of 82.5%, which is unreasonable. That is not what the average person should expect. I'm not a genius stock picker. It's not because my stocks did well. It's because I invested a lot more than the average person would between the years 2021 and this year. So because I put in a lot more money is why I made a lot more in dividends. Again, normally this process is slow, but it picks up much faster. And you can see that every single year the income grows slowly, but it picks up faster and faster. Now that's only the second way to make money with dividend investing. The third way are dividend increases. And this is really the most interesting one because you can think of these as sort of like paycheck increases, except you don't have to do anything for these paycheck increases because your money is working for you rather than you working for your money. So in September, I had a record-breaking increase of 9 paycheck raises or dividend increases across 9 different stocks. The record is that my income annually went up by $101.25, which I know doesn't sound like a lot. Like, okay, Andre, you're gonna make an extra $100 next year. What is that gonna do? But here's a better way to think about this. If there was a stock that paid you 4%, how much would you have to invest inside of it to make $101.25? Here's how you can tell. You would take $101.25 and divide it by 0.04, 4%, because the 4% retirement rule. That would give you $2,531. That is a lot of money, except that's $2,531 less that I need invested, and that was just in the span of 1 month. Imagine how fast this stuff adds up over the course of weeks, months, and years when you reinvest it back into itself. Now, to be fair though, September is usually a really big month, probably the biggest other than December. It's usually every 3 months that you have that are the biggest payouts. So that's January, February, March, April, May, June, July, August, September, and October, November, December. So those months are the biggest ones of the year. But still, that's the magic of compound interest. Now in October, I didn't quite make as much money. I made $587 in dividend income, which is still really, really good. But still, even for October, I've had another $33 added to my annual income. Again, doesn't sound like a lot, but that's an additional $833 invested into a 4% stock. Except that's $833 of an equivalent that I don't need to invest, and that comes every single month. That's why this snowball is so incredible. So for those reasons is why I love being a dividend investor. But here's the truth. Even though I've told you just how powerful dividend investing could be, the truth is that if I invested all of my money into a stock like VTI or VOO, even if I've counted all of the dividend increases and the payouts and everything into that, I would still have more money on paper right now in this portfolio if I just bought this one stock. That's a pretty interesting way to think about it. Again, the price you pay for the larger growth is your mental sanity. And I think it's a little bit easier to plan for the future and for retirement when you know and you could see the progress of your income without needing to sell your stocks. Whereas investing into VTI, you would have to sell the stock to pay your bills. But with dividend investing, you don't have to sell anything at all. You just collect the paychecks. So it's just two different philosophies. Neither one is right or wrong, but those are the two differences. Now, I technically didn't answer the question as far as which dividend stocks are the cheapest and the best to buy to make the most amount of money with. That's because there is no answer to this question. Here's why. If there's two stocks, one that's $100 with a dividend yield of 4%, that means I'll make $4 a year buying that stock. Now, if there's another stock that's $10 in price and it's also paying 4% dividend yield, most beginner investors would assume instinctively that that cheaper stock is the better cheaper stock. But that's not the truth. The dividend yield tells us nothing about the amount of money we can technically expect to make and the quality of the company. And when you add to the fact that there are something called fractional shares, which almost every brokerage is offering now, that means you could make almost any stock you want as affordable as you want, because you could buy $10 of the $100 stock and get the same 4% of the $10 one. So it makes no difference. So personally, I found that focusing on the quality of the company and a balance between the growth rate and the dividend yield is much more important. That's just me though. Now, personally for now, I'm putting most of my money into VTI. All the other stocks I've shown you in my portfolio, the income is reinvested back into those stocks. But as far as my active investing, where I dollar cost average every single day, that's going into VTI. Now, VTI is a stock that pays 1.5% in dividend yield, and they've grown their dividends by roughly 6% over the last 5 years on average, which is pretty decent. But VTI is not considered a dividend investing strategy. It is tracking the whole US stock market with several thousand stocks. And I know that this strategy, despite how impressive dividend investing sounds, will actually make me more money on paper. But there's a price to pay. The price is that in some years, this portfolio will be down big time, and I will not have the comfort of making that passive income to make myself feel better. When I first started investing, that was not a truth I was willing to put up with, because my perception of investing was sort of what they make it in the movies, which is that it's gambling, right? And passive income made it easier, but that's not the truth. Over the long term, broad market index funds have always outperformed everything else. Not to mention the fact that I'm also in the highest tax bracket possible, so making my dividend income means I give up a huge portion of it to taxes. But as with all things in life, there are personal truths and objective truths. My personal truth is that I still love dividend investing and I think it's a wonderful way to make passive income, even though the objective truth is that it is not the best way to make the most amount of money possible. But that's okay because it's called personal finance for a reason. If it was called objective finance, we'd all be investing into real estate and borrowing as much money as possible from the banks and buying up as much property as possible, because that's how billionaires are made. Real estate is the #1 generator of wealth, and that's been proven. Billionaires are not made by investing into dividend stocks, but that's okay because it's what resonates with you, with your goals, and what makes you sleep better at night. And that's gonna be different from person to person. It took me a long time to understand what the rules were before I knew how to bend them or break them. And dividends to me are a wonderful way to bend the rules, and I hope I've explained those rules and how dividends fit in. As always, have a wonderful rest of your day. Smash the like button, subscribe if you haven't already, and I would love to see you back here on Monday, Friday, sometimes a Wednesday. I'll see you soon. Bye-bye.